Okay, let's unpack this. Today we're doing a deep dive into the latest financials from Alphabet. Their Q2 2025 earnings just dropped, and, well, there's a lot to get into.
Indeed. So we're working off the official statement, and the CEO comments released July 23rd, covering the quarter ending June 30th. And yeah, it's not just numbers, right? It's about the story they're telling.
Exactly. Our job here is to cut through the jargon, pull out what really matters, and figure out what this means. For Alphabet, for tech, and, for you listening. What's driving things? Where's the money going? Any surprises? So, first impressions. Sundar Pichai called it a standout quarter, said there was robust growth across the company.
Yeah.
That sounds, well, pretty optimistic. Do the numbers back that up straight away?
Oh, absolutely. The top line figures are strong. Consolidated revenues hit $96.4 billion. That's a 14% jump year over year. Even in constant currency, stripping out exchange rate effects, it's still up 13%.
Okay, 14% is solid. And profitability.
Also good. Total operating income up 14%, keeping the operating margin strong at 32.4%. So yeah, they're keeping a good chunk of that revenue. Net income climbed 19%, and the earnings per share, the EPS, that jumped 22% to $2.31.
Right, so those are pretty healthy increases across the board. Strong momentum seems fair, but the big question is why? Where's this growth actually, coming from specifically? Well, Pichai was pretty direct. He said, quote, AI is positively impacting every part of the business, driving strong momentum. So they're pinning it heavily on AI, not just future stuff, but right now.
Exactly. And you can see that link in the segment results. Look at Google search, and other revenue was up double digits, $54.19 billion. And Pichai actually mentioned new things like AI overviews and AI mode are performing well.
So AI isn't just back-end optimization, it's customer-facing features driving search growth.
Seems like it. And then there's Google Cloud. Wow. Up 32% to $13.6 billion. The report explicitly says this was led by growth in GCP, AI infrastructure, and generative AI solutions. Cloud's now running at over a $50 billion annual revenue rate.
Okay, that's where it gets really interesting. AI isn't just fluff, it's showing up big time in search, and especially cloud revenues, measurably.
Yeah, definitely. Let's look at the whole Google services segment. That's the biggest piece, $82.5 billion in revenue, up 12%. We mentioned search doing well. YouTube ads also had strong double-digit growth, hitting almost $9.8 billion.
Right, YouTube continues to be a powerhouse.
And Google subscriptions, platforms, devices, that bucket also grew double digits, over $11.2 billion. Now, there was a slight dip in Google network revenue, down to about $7.35 billion. But, overall, Google advertising still pulled in a massive $71.3 billion.
Okay, so the big engines within Google services, search, YouTube, subscriptions, are firing really well. But let's circle back to cloud's profitability jump. That seemed like a huge leap.
It really was. The operating income for cloud, it more than doubled. Went from about $1.17 billion last year to $2.83 billion this quarter. That's a massive swing. Shows real improvement in profitability, not just revenue growth.
Huge turnaround there. Okay, so the core businesses look strong. What about the other bets? Are they still, well, bets?
Yeah, pretty much. Revenues ticked up a little, $373 million, but the operating loss is still significant, $1.25 billion. There's still very much long-term speculative projects, R&D for the future, basically.
Got it. Still costing money, not making it yet.
Now, looking at the overall operating margin again, that 32.4%, the report mentions it benefited from strong revenue and continued efficiencies, cost savings. But it was also partially offset by a charge related to a settlement in principle of certain legal matters.
Ah, okay. So there's a legal settlement cost, and they're pulling the margin down a bit despite the growth and efficiencies. So what does this all signal about their bigger strategy? Where are they putting the big money?
Well, this is key. They're massively ramping up capital expenditures, CapEx. They're forecasting about $85 billion for 2025.
$85 billion.
Yeah.
That's enormous.
It is, and they tie it directly to strong and growing demand for cloud and the huge opportunity ahead in AI. They're building the infrastructure, data centers, specialized hardware, you name it. It's a massive bet on AI's future.
Wow. That's not just investing, that's like building the foundations for the next decade.
Exactly. And related to that, those alphabet level activities costs also went up to nearly $3.4 billion. That includes shared AI R&D, developing their big general AI models, but also things like severance and office space charges.
So huge strategic spending on AI infrastructure and R&D alongside some ongoing restructuring costs. It paints a very clear picture of priorities.
Shifting gears slightly to the balance sheet, they also raised some money. issued $12.5 billion in bonds back in May. Just standard corporate fundraising, using it for general purposes, shows they can access capital easily.
And cash flow.
Free cash flow, which is basically operating cash minus capex, was $5.3 billion for the quarter.
Okay, let's zoom out again. Geographically, where did this growth actually happen? Was it mainly the U.S.?
It was pretty broad, actually. APAC, Asia Pacific, had the strongest reported growth, up 19%. That's $16.5 billion. In constant currency, it was 18%.
Okay.
Other Americas had the highest growth in constant currency, 23%. Reported was 16%, bringing in $5.7 billion. EMEA, Europe, Middle East, Africa grew 14% reported, 11% constant currency, reaching $28.3 billion. And the U.S. grew 12%, hitting $46.1 billion.
So solid growth pretty much everywhere.
Yeah, and that constant currency number is important, right?
Mhm.
It shows the underlying business strength without the noise from changing exchange rates.
Right. So what's fascinating here is seeing that global spread. It's not just one market carrying the load. And yeah, currency does make a difference in the reported numbers. Okay, so wrapping this up, our deep dive shows Alphabet's Q2 was, well, undeniably strong. AI seems to be a real tangible driver now, especially in search and cloud. Plus, these huge strategic investments in infrastructure and solid growth across the globe.
Absolutely. That massive capex number, the $85 billion projection, and the focus on AI R&D, that signals a very clear, very determined long-term strategy. They are pouring resources into leading the AI race, laying the groundwork.
So for you listening, I think this dive shows that, yeah, the big numbers are impressive, sure, but it's really those strategic moves, the why behind the spending, that tells you where a giant like Alphabet is truly heading. They're actively building what they see as the future.
Which leads to, I think, an interesting final thought. Given this huge investment in AI infrastructure and how it's already boosting cloud and search, what other parts of Alphabet's business, maybe the ones not making headlines yet, could AI quietly revolutionize? Think about Waymo or health or other bets. How might this AI push reshape those areas in the coming quarters, even if it's not obvious on the balance sheet today? That's something to watch.